What's up, team? Welcome back to another daily recap of the same strategy, just executed over and over and over and over again. Guys, I call this data-driven day trading strategy because everything is based off data, right? Every single decision I make is based off data. I talk to a lot of traders and they all struggle with hesitation. They struggle with actually executing the strategy. They struggle with pulling the trigger, right? They get all in their mind about it. They get all emotional about it. They're like, Josh, I don't know what to do. I want to take it long, but there's a critical level there. I get it. I've been there. I've been there, guys. I've made those decisions over and over and over again. And this is the thing. This is a dog eat dog world, right? This is a eat or be eaten alive game. Every time you lose, someone else is winning. Every time you win, someone else is losing, right? There is no trade that happens where two parties win. You either are winning or you are losing. Todd, what up, brother? You know we had to talk about today. Bro, you know we had to talk about today, and you guys already know how we have to identify these setups. Guys, we take these setups under one condition. If our edge presents itself, that's it. We are extremely surgically precise when it comes to these entries. We know exactly what to look for. We know exactly what to do when we see it. When we see our entry, when we see our criteria, we act. And today I want to break it down in deep discussion so that everybody out there can get a taste of what we do over here at High Performance Trader. And guys, before we go any further, if you want to get involved, you click the link below. Trader Bootcamp promo. It ends by the end of this month. I'm extending it for 20 more days because we had so many people join. I know everybody out there wants a team of individuals that are strong, that know what to look for, that know how to execute, that know how to identify their edge and see it. They got to take it, just like Todd said in the chat, right? So, guys, click the links below. You already know what to do. All right, so you guys are going to see here, this is what I hit today over here on SPX. I took 2 trades. I was talking to my boy Darren. Shout out to my boy Darren, right? We only trade our edge, right? We only trade our edge. And when we do not see our edge, we do not make a move, right? All what we do is wait patiently. If our edge is not present, we do not make a move. Josh, what does that mean? Well, it's very simple. We have been diving very deep into what I like to call the HPT crossover. So over here in the Discord, you're going to see 2 months worth of trading data on this one strategy. For the month of September, this strategy had a 72% win ratio, and that is a very conservative number, meaning on some of the losers, you could have still made money. But in a nutshell, for me to qualify it, to quantify it as a profitable trade, I need to see at least a dollar move in the preferred direction. Okay, so what does this mean and why does it help me, right? So trading is all about understanding your strategy. You need to understand your strategy on a level like no other. You need to be extremely clear. You need to be extremely specific, right? You need to have extensive understanding with simple criteria. It cannot be complex. Right? If it's complex, you've already lost. It needs to be a very simple strategy that you can repeat, right? Repeatability is critical, right? So what do I look for, right? So over here, you're going to see strategy criteria. Number 1, critical level. Number 2, EMA cross. The cross has to be there, right? Number 3, we're closing above or below the 50 EMA, and we are identifying the RBI, right? So, all right, enough talking. Let's get into the trade. So I'm going to whip out SPX because SPX made it very clear to me today. We were opening below open print, right? Let me move end of day. I'm going to put end of day right where end of day was. This was previous day end of day, right? So what you're going to see here, we're talking about this day right here. Okay. So open print and end of day align perfectly. Right? And that really stuck out to me today, right? So what I see here is price rallies down into previous day open print. We get some buying. Price then rallies above open print. I do not get an entry here. I'm patient. I'm staying. I'm honestly, you guys want to know the truth? I'm not even in front of the charts right now. I'm on my phone driving and I'm looking at the market and going, that I want nothing to do with that. My entry isn't there. Why isn't my entry there? I didn't get an RBI for my entry. I need a red bar to be ignored for me to enter the market. Well, what does that look like? Let me show you. 2-minute time frame. We went long today on this candle, right? And you're going to see it here. Hold on 1 second. Very simple, right? So we had open print. Let me go back here. Hold on. Bear with me 1 second. All right. We took the market long today right here off end of day, right? And there's a few things I'm looking at, right? We're bouncing in the end of day, right? We're getting back above, what is it right here? This red bar. We come into end of day. Price comes down, cannot make a lower low. And then we break above this red bar right here on this candle. I'm in the market long. My stop is below end of day. If I whip out the Discord here, we'll get a way more specific. Let me see. All right, where is it right here? Bam. Okay, right here. So I put right here at 1125, longs with a 581.70 stop, right? So I'll just look at this chart and break it down. So there's a few things I'm looking at here. End of day, price rallied above it. We ripped into PDH. So this gives me a very clear upside target, right? Number two, we ripped into end of day, buyers defended it. How do I know buyers defended it? The RBI. There wasn't a red bar that was ignored until right here at 1122. So this bar was ignored. I'm in the market long. My stop is below the red bar. That's my criteria. That's my entry. And the study, the HBT cross, it is from open print to 12 a.m. So anytime in between open print and 12 a.m., if I see my criteria, I'm going to take it. And this was my criteria. It was a very simple trade. Look at this. Literally, immediately, price starts to rally. I put here in the Discord, let's get PDH. So in the first 4 minutes, this thing is rallying. By 11:29 a.m., I was in this trade for 7 minutes, and we caught a beautiful move all the way up to previous day high, right? So once again, guys, very simple. What am I looking for? I'm looking for critical level, right? I'm looking for an RBI or a GBI. In this case, it's a red bar that was completely ignored. I'm putting my stop below it. I've identified a super high probability setup with extremely low risk. We hit this trade for over 38%, booked it. Why did I take profits right here? For one reason. We were extremely extended from the 9D EMA. Guys, every time I get extended from the 9D EMA, trading SPX, I take profit. I understand that there is an extremely high probability that price is going to either consolidate and cost me theta, or it's going to reverse back into the 9D EMA. That's based off data. That's based off extensive research, back testing. I have been logging these trades on the Discord alone for 18 months. My trading journal years over 4 years. So listen, like everyone asked me about hesitation. They asked me about conviction. Guys, it lies in the work you're not doing. If you logged your trade every single day, you would have conviction. I don't care who you are. It doesn't matter. There's no excuse. If you logged your trade every single day for 18 months, there's no question. When you see it, like Todd says, you have to take it. If I do not take the strategy, if I do not take the trade, I'm not playing the game. If I'm not taking a trade based off data, I'm gambling. If it's based off data, you are now the card counter. Think about it. You could either play blackjack or you could count the cards. You pick. I'm sure you get a little more thrill when you're playing blackjack, right? You don't know what's going to pop up. But on the contrary, if you're counting cards, I'm sure you're going, all right, listen, there's an 80% chance that there's a face card here. I'll bet, right? Maybe not as thrilling, but way more consistent, right? So basically, moral of the story, guys, is you have to have very clear, specific, you have to have clear entries, clear exits. You need clear criteria to take the trade. Yes, just like Debo just said, Not getting greedy. You got to let the market reward you when you follow your process. That's so important. Think about that. If you see your edge and do not act on it, and then the market goes in your favor, now you're literally robbing yourself. And now you're de-energizing the belief, right? You literally, every single day, my goal is to do one thing. It's to energize the belief in the process. It's not to have a green day. I don't care if I have a green day, because statistically, as long as I trade 10 days, 7 of them are going to be green. As long as I follow my criteria. My superpower is the data. It's not my ability to predict what's going to happen. It's not my intuition of knowing, oh, this setup's going to work, right? No, it has nothing to do with that. It has everything to do with my data. And if you don't have data, that's why you do not have conviction. It's so important, guys. I cannot stress it enough. So that was trade number 1. Also, another reason why I long this is this candle closed above the 50 EMA. So this, at this point, was no longer bearish, right? We closed below the 50. That's kind of bearish. And then we closed right back above the 50, which is extremely bullish. We call that the bull 180, right? You long that, appropriate risk, donezo. All right, so trade number 2, right? This trade was the one that you guys seen for 104%. Once again, it wasn't even that complicated or complex. It was extremely simple, but I'm going to show you what was going through my head. So we ripped into previous day high, which lined up with this pre-market level, and some sellers came into the market. Then we fall below the 50 EMA, right? So you can see here, the 50 usually plays a pretty important part throughout the daily price action, right? If I'm above the 50, that usually means I'm bullish. If I'm below the 50, that usually means I'm kind of bearish, right? You whip out the larger time frame and you're starting to realize here we have this very large supply zone that dates back from about a week. I mean, look at this, right? This is definitely an area of supply. We're trading towards all-time high. And if I'm right, I think QQQ was as well, right? So QQQ is trading right above all-time high, right? So if sellers come in, what do I need to see? Well, I need to see that 50 get defiled, right? I want to see sellers take that 50. And at which point do I enter? Once I get the green bar that was ignored. See, guys, it's really cool. There was no green bar that was ignored until this candle. Think about it. This green bar wasn't ignored. This one wasn't. This one wasn't. This one wasn't. This one wasn't. That one wasn't. This one ignored. At that point, I'm in the market short. Let's see when I got in here on the Discord here. Let's see here. We go over here. All right, in shorts, targeting open print, right? So the market looked like this. This is when I actually called the trade out for the team, right? I was like, okay, at this point, I'm in the market short, targeting open print. Notice here, getting a green bar that's retesting a previous level, right? So let me show you exactly here. That was at what time? That was at 12:59. Okay, let's see here. So I shorted the market right here. Okay, so let's go on to the 2-minute. Oh, yeah, this was it right here. Okay. So once I see the GBI on the 5-minute, I whip out the 2. And now I need to find my entry, right? So green bar ignored. And my entry is on this candle at 12:59 p.m. Right there. I get in the market on this candle. And my stop, let's see where I put it here. 582.40, right? So right here, 528.40. Why is my stop right there? Guys, the green bar that we just ignored, my stop's above it. I know as long as buyers don't take that top out, I got to stay in this trade. And I know with statistical reliability that as long as buyers don't take that top out, open print is extremely probable. That's it. That's all I look for. Guys, this is what the market looked like when I was entering short. Like, we have to capture that. At this point, I'm going, okay, buy SPX puts. Let's get it. First target, end of day. Next target, open print. I was watching SPX, though. That's the reason why I got in the trade. So this is what it looked like here on SPX. We had a much downside. Where is it? 12:59. All right, so right here. I got in the market. Market looked like this. Open print. I got in on this candle as it retested the GBI. Bam. And then for, what was it? About, let's see here. We got in at 12.50. Yeah, so I was in this trade here for about 40 minutes, and I took profit on this candle. Right? Very, very simple. 2 simple trades. Literally, 2 simple trades based on critical levels, based off moving averages, based off the green bar and the red bar that was ignored. Right? So, guys, if you guys take anything from this day, from this recap, right? We've been doing these a lot. I need you guys to take the fact that it's not about how many trades you take. It's about your repeatable approach. You need a super systematic, repeatable approach. Get specific with it, get very clear with it, and repeat it. I love you guys. Thank you for coming. Make sure you hit a like, share, give this to somebody that needs to see it, and I'll see you guys in the next lesson.